About the financial controllership. What is a financial controllership? Financial controllership is a management function that supervises the accounting and financial reporting of an organization. It is responsible in the implementation and monitoring of internal controls. What are risks? For all business, there are risks that exist and that need to be identified and addressed in order to prevent or minimize losses. Risk is a threat that an event, action, or non-action will adversely affect an organization's ability to achieve its business objectives and execute its strategies successfully. Risk is measured in terms of consequences and likelihood. The following process is used for assessing risk is identifying risk, resourcing risk, and measuring risk. Overall, you should focus on the high risk affecting your operation, identifying sources, prioritizing risk, business risk. Risk considerations. Consideration evaluates the natures and types of error and omissions that could occur in what consideration significant risks or error and omissions that are common in the industry or have been experienced in prior years. In information technology risk, access, backup, security, and the data integrity, susceptibility to error or omission, as well as manipulation or loss. Robustness versus subjectives of the processes of determining significant estimate, extent or exchange in the business and its expected effect, and other risks extending beyond potential material error or omissions in the financial statement are internal control. Management must control identified risks to help the company. There are four types of identified. So number one is achieve its performance and profitable targets. 2. Prevent loss of resources. 3. Ensure reliable financial reporting. And 4. Ensure compliance with laws and regulations, avoiding damage to its reputation and other consequences. In summary, internal control can help our company get where it wants to go and avoid pitfalls and surprises along the way. Definition of internal control. Internal control is a process effected by an entity, boards of directors, management, and other personnel designed to provide reasonable assurance regarding the achievements of objectives and the following categories: effectiveness and efficiency of operations, reliability of financial reporting, compliance with applicable laws and regulations. Concept and objective control definition reflects certain fundamental concepts. Internal control is a process. It means to an end and not end itself. Internal control can be expected by people. It's not merely policy, manual, and form, but people at every level of organizations. Internal control can be expected to provide only reasonable assurance, not absolute assurance, to an entity management and board objectives of internal controls. Internal control are established to further strengthen. 1 is the reliability of integrity of information. 2. Compliance with policies, plans, procedures, laws, and regulations. Safeguard of assets, the economical of efficient use resources, the accomplish of establishment, objective and goals for operation for program. Internal control marks and the fact marks. Facts. Internal control start with a strong set of policies and the procedure control environment. Internal control, that's why we have one internal auditors play a key role in the internal auditors system of control. Management is the primary owner of internal control. Internal control is a finest thing. It's integral to every aspect of business. Internal control are essentially negative. Make the right thing like a less of thou shall not happen the first time. Internal control take time away from internal controls shall be built into or are core activities of making products not onto business processing, selling, or serving customers.
Control focus. We're defining the control focus. The new approach of controlling the business risk may be characterized by the new rules of the prevent and monitor and build in quality as opposed to the old rules of detect and correct and expect in quality. This means a paradigm shift in the traditional viewpoint of control as illustrated in the following table. Internal control structure. In many cases, you perform controls and interact with the control structure every day, perhaps without even realizing it. An internal structure is simply a different way of viewing the business as a perspective that focuses on doing the right things in the right way. COSO components define the Committee of Sponsoring Organizations of the Tradeway Commission, or as a COSO, was formed in 1985 to improve the quality of financial reporting through business ethics, effective internal controls, and corporate governance. Based on the principles, they developed and published the COSO framework in 1992 as foundation for establishing internal control systems and determining their effectiveness. Control environment. The control environment sets the tone of an organization, influencing the control consciousness of its people. It is the foundation for all the other components of internal control, providing discipline and structure. Control environment factors include the integrity, ethical values, and competence of the entity's people, management philosophy, and operating style. The way the management assigns authority and responsibility and organized and develop its people, and the attention and direction provided by the board of directors. Risk assessment. Risk assessment is the identification and analysis of relevant risks to achievement of the objectives, forming a basis of determining how the risk should be managed. Because economic, industry, regulatory, and operating conditions will continue to change, mechanisms are needed to identify and deal with the special risks associated with change. Control activities. Control activities are the policies and procedures that helps ensure management directives are carried out. They help ensure that necessary actions are taken to address risk to achievements of the entity objectives. Control activities throughout the organization at all levels and all functions. They include a range of activities as diverse and approvals, authorizations, verifications, reconciliations, review of operating performance, security of assets, and segregation of duties. Information and communication. Pertinent information must be identified, captured, and communicated in form and time frame that enables people to carry out their responsibilities. Information systems produce reports containing operational, financial, and compliance-related information that make it possible to run and control the business. They deal not only with internally generated data, but also information about external events, activities, conditions necessary to inform business decision making and external of the organization. All personnel must receive a clear message from the top management that control the system, as well as how information upstream. They also need to be effective communication with the external parties such as customers, suppliers, regulators, and shareholders. Monitoring. Internal control systems need to be monitored, a process that assesses the quality of the system performance over time. This is accomplished throughout our ongoing monitoring activities. Separate evaluations of a combination of the two. Ongoing monitors occurs in the course of operations. It includes regular management and supervisory activities and other actions personnel take in performing their duties. The scope and frequency of separate evaluation will depend primarily on assessment of risk and effectiveness of ongoing monitoring procedures. Internal control deficiencies should be reported upstream with the serious matters to spread the management and the board. Prevention techniques are designed to provide reasonable assurance that only valid transactions are recognized, approved, and submitted for processing. Therefore, many of the preventive techniques are applied before the processing activity occurs. In most situations, preventive techniques are likely to be more effective in strong control environment when management authorizations criteria as well defined and properly communicated. Control type definitions. Preventive means manual. Preventive means system. Examples of preventive controls include segregation of duties, business system is integrity and controls, application designs, standards, change controls, security controls, system backup and recovery, physical safeguard and access restrictions controls. It includes human, financial, physical, and information accesses. Detection techniques are designed to provide reasonable assurance that errors and irregularities are discovered and corrected on a timely basis. Detection techniques are normally detected are performed after processing has been completed. They are particularly important in an environment that has relatively weak preventive techniques. That is, when front-end approval and processing techniques do not provide reasonable assurance then that unacceptable transactions are prevented from being processed or do not assure that all approved transactions are processed accurately. In the case, after-the-fact techniques become more important in detecting and correcting errors. Control type definitions. Detective means manual and detective means system. Examples of detective techniques include reconciliation of batch balance reports of contact logs obtained by originating departments, reconciliation of cycle inventory counts with perpetual records, review and approval of reference file maintenance OSIS reports.
Cash activities, cash receipts. The receipts of cash should be centralized and customers should be obtained a receipt at the conclusion of each sale. Cash receipts should be deposited to the bank intact on a daily basis. Cash disbursement. All cash disbursements should be made by check and petty cash fund system should be maintained for minimal operating expenses. Sales and receivables. Check sales figures from their individual source, so forgiven invoices. If sales staff work on commission, ensure that their sales figures are valid and commissions are not paid until customers' accounts are settled. Reconcile sales registered with takings and credit card receipts. Make sure that goods are sent COD or with a tax invoice. Obtain evidence of delivery. Sales and receivables. Ensure credit and collection policies are in writing. Conduct credit checks on new credit customers regularly. Gauge accounts and have an independent review on follow-up only. Number 18. Inventories. Reconciling inventory to general ledger. Implement an inventory system that tracks all information so that returns damaged items, sales, and purchases would each be accounted for and currently recorded. Inventory count document the procedures for performing its physical inventory counts. These instructions should include specific tasks to be performed by personnel. Example given: creation of tags and control sheets. Inventories valuation of inventory establish a capitalization policy on all inventoriable items and determine their unit cost. Monitor sales activity and profitability, and then analyze slow-moving or obsolete items. So, sapot ako nasabtan na ni para kanang inventory ko usa man sa kining purpose nga mahibaw-an nimo kung sa mga sellable product, kung sa mga past kanang buying product, kanang dali ra mga mapalit mahalin, mga product nga dugay mahalin. So ma-monitor nimo sales activity and profitability. So slow moving or obsolete items kanang lagi kanang ay man namo mga product nga isod kayo siya kahit mahalin bitaw, kahit mahalin kay ma-dispose. Ma-monitor na nimo inig inventory nimo ay kani kadto pa maning last year o kadto maning last month apa maghapon og gihapon halin. So inalantaan nimo rin og daghan. So ana ka idea kung sa hindi siya kay dali ra kay nahurot kani may atong rin og daghan. So mo na sa usapot sa aning number 19. So analyze slow moving or obsolete items. Obsolete items kadto nang mga panagayo, mga hapit ng piece out. Disposal of obsolete items establish a policy on the disposal of obsolete items since storage costs are still being incurred if these are maintained. So mo na ako gikon kahit game kuligya yan paano siya kuhan may space hatag kanang trabaho sa imong mga workers din ang iyahang kapitalisasyon na gihapon. So murag nonsense kung imong gibuan sa business. So kinahanglan ma-monitor siya kung asa na. Then the number 20, property and equipment. Subsidiary ledger of or schedule that records important identifying information for individual fixed asset components. Authorizations or approvals for the acquisition of new fixed assets from the senior management. Periodic physical inventory of all fixed assets and reconciliation with the subsidiary ledger. A written policy regarding capitalization of fixed assets and expensing. Authorizations or approvals of dispositions of fixed assets. So this is all about assets, no, and property. This is it. Number 20 is property and equipment.
Disbursements and payables. Disbursements refers to a range of payment types, including cash, electronic fund transfers, checks, or checking account. Some examples of disbursements are payroll expenses, rent, taxes, or insurance premiums. On the other hand, accounts payable show the balance that has not yet been paid to the associated individual to complete the transaction. Some examples include accrued expenses like logistics, licensing, leasing, raw material procurement. Document purchasing and accounts payable procedures. Purchasing document means a document used to authorize purchase of goods, services, or works, including purchase orders, service agreements, contracts, and travel approvals. While accounts payable procedures includes invoice, data capture, coding invoices with correct account and cost center, approving invoices, matching invoices to purchase orders, and posting for payments. The accounts payable process is only one part of what is known as P2P or procure to pay. Next is to ensure payments are on original invoices only, not copies or faxes, otherwise they may be paid more than once. The original invoices or a request form to paid is extremely needed to prevent from duplication through matching the purchase order, the invoice, and the receiving report to ensure that all details are uniform. Next is, after payment is made, stamp or perforate the original invoice to prevent reuse. Then put in place controls to check for identical payments through the online payment security, and ensure refund checks from suppliers are handled by someone other than the person processing the invoices. Refund checks are handled through a contra revenue account known as the sales return and allowances account. Reports accounting coach: when you issue a refund, you make a refund double, which means you must adjust two separate accounts in your record. The overview of financial controllership. A financial controller is a professional responsible for preparing a company's financial reports, which include balance sheets and income statements. They also assist in compliance audits and monitoring internal controls to ensure that everyone does their job